Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, September 13th, 2021. We'll keep it brief. Just want to do an update on the broad markets and a few other things I'm watching lately. This is SPY. I did get an update out this morning in pre-market, the S&P 500 tracking ETF. We had a recent sell signal here where we broke the 60-minute trend line right there. After that whipsaw, which really wasn't a sell signal because it was not confirmed with a breakdown on QQQ. So this was our sell signal, which was confirmed. QQQ broke down at the time, and then we had this minor support right here. Took it out right there. That's what you want to see. Nice red candle. So that's shorting up 1, shorting up 2. Back tests highlighted as shorting up 3. Hit our first target and had a little bounce, and as expected, that's usually the initial tag of a support level will often produce a reaction there, and that's what happened. And now we're back down right on it, so not really through it yet. You can see these last few candles. You know, when you have support here, what happened? You had a big down to it, and then this set that reaction low. We snapped back, had the reaction right there, but this reaction low really at that point becomes support. That's what traders will often watch. These are called pivots or reaction lows. And you can see each and every candle. Look at this one you have, zoom in nice and tight. You see the bottom of this candle right there, the skinny part, the shadow, actually right there. The body of that candle, the body of that candle, and the body of this candle. So what we need to do is take this out, and I suspect we will because we already had the bounce. I didn't think it'd go very far. That first target, remember, was just a very shallow minor target, and I'm still favoring a move down here to T3 at 436. So I believe that's coming, and that's what we need to do. See more downside. And as little as it was, that's the biggest drop we've had in quite a while in the markets. But again, it's been a slow grind higher. As far as QQQ, I should say, a similar story here. We had a recent trading range. There was our sell signal right there, the break of the 60-minute bearish rising wedge. Set up. We didn't really go anywhere for a little while. We've been in this trading range here, and then boom, took it out there. And this morning, again, in pre-market, we were back testing. That's when I got that post out. That was providing objective short entry on the back test, and we were rejected. And again, nothing big so far, but I'll give it a check mark because of the fact that we did get a rejection there. It's showing that this level traders are watching, and or were watching at that time, and we broke down. Now we have a potential little possible flag here. It's not perfect in symmetry, but you can see this little consolidation there. And so a break of that to the downside should bring us, I believe, to my first target. Remember, I had different targets on QQQ. The first target and minimum target for me here is at 369.50, still the first target. T2 would be down here, this support zone, call around 360, 361, somewhere in there would be the second target. So far so good, and again, be a little bit better if we can take out today's lows. There's also some very minor support. You had some resistance right there, and that's about where we fell to today. So just like SPY, a little more downside, and I think we'll get it this afternoon based on the fact markets are starting to roll over, and that should take us down there. And wouldn't be surprised. Let me see how far that is. 1.5%. That would be one of the biggest. It would be certainly the biggest late day slide in a long time, but we could possibly hit that today, either in the regular session or after hours. And futures, you can kind of get a clean view of what's going on. As the futures are trading, these are the Globex futures, so they trade virtually around the clock. Shut down a little for trading each day, and then on Friday, and they open back up on Sunday evening, and you can see just stair-stepping lower, and we're starting to, at this point, you can see we're starting to get a little more momentum on these downward thrusts right there, a little more impulsive selling than we had early on after the market kind of rolled over at this slow top and put in a divergent high here. And then NQ. Okay, this is NQ futures here. There's that the recent trading range right there. There was our 60-minute wedge break, put us on a sell signal, and then break down there. There was a secondary or second sell signal, back tests, third objective short entry, and then break. Oh, well, actually, we're close enough right now. We're trading on that 15. I call it rounded up to 15,400. I have it at 15,398. Yeah, 15,399. So we'll call that 15,400 still the first target, and we're there on the future. So that's why I like to watch all of these. So we need to see same story. We need to see just a little more downside below today's lows, and it should open up. And again, at minimum, bare minimum, I think we're coming down here to that 15,150, 165. That's really good support. It was resistance here for a while. Then we broke out, nice big green, impulsive buying there to validate that as an important level. So that's a magnet to me on the downside. I mean, if you're a very active trader, you could cover there or probably get a reaction. Although I do favor more downside from here. Wouldn't be much of a correction, percentage-wise from the highs recently. If I put that line up there. Let me move this line around a little bit. It's tough because if I drag it, it moves those other lines. So let me put this up. Looks to be about a almost 4% drop, 3.5% to that 1551 target off the recent highs. So again, I think we could get some more ultimately, but a good chance of a reaction there if you want to, try to game a bounce and then get back in, or you just lower your stops and let it run and see if we can come on down here to this purple line at about 14,788. And then on crude, I pointed out last week a potential head and shoulders pattern. That's why I had question marks on it, with LS being a left shoulder head right there, and then a right shoulder at this point. We've come up too far. To call this a right shoulder now, it's too close to the head, so I'm gonna take that away. But however, inverse, or not inverse, a regular head and shoulders pattern or not, you still have that same support. This was that neckline on that pattern. So again, I'm not going to call this a potential head and shoulders anymore because we came up too far here on this right shoulder, or maybe second right shoulder. That was the first right shoulder I mentioned last week. And that's a little too tall, just in my book, to be head and shoulders. And it's really not much of a topping pattern either, because we're in correction mode. We've been stair-stepping down on crude. Bottom line on crude, I still think there's more downside, and that will be largely, not exclusively, but largely contingent on my call for more downside in the equity market. I do think if we hit those next downside targets on the S&P 500 and NASDAQ 100, that will most likely bring crude along down with it on diminishing growth expectations. And then of course, if we break that little minor support line there, this was the measured target for the head and shoulders pattern, and whether or not it's head and shoulders, I still think we'll come on down there to that 64.90-ish target right there in crude oil. And if so, keep in mind, a lot more bang for your buck in there, because that would be about an 8% drop from where we're at right now, should that get hit. So yeah, I think there's a better risk reward, or at least better return potential there on crude oil. And you may want to have a stop there. Depends, of course, again, where you got in. This was our sell signal back here, really running into long-term resistance. So this trade is still profitable, just kind of working its way down. And I do think if the equity markets roll over, we'll get an impulsive leg down. This has been a period of consolidation, so I think if we take that period of consolidation out, you'll probably see some pretty impulsive selling come into crude oil, in my opinion. And on a related note, natural gas, really still pushing that upper limit. Remember, natural gas was recently mentioned as a short, based largely on the long-term outlook here. This is a weekly chart, weekly candlesticks, and we're going all the way back into 2006 back here where this chart picks up, and showing you, again, this was highlighted here, just a pretty, a nice, not a super solid, but a decent resistance level around $5 right there. Today, natural gas had a pretty big up move, but again, relative to this, nothing out of the norm. Natural gas swings up and down high single digits and sometimes even double digits in any given day. That's just the nature of this beast. So it's up as I do this video up where it's not shown on this chart. This is an end of day chart on stockcharts.com here, but we're up about 5.87% right now, and we're right above that resistance, but not too far. So we might get a little pop here. We still have, if we can reverse, we'll still have these divergences intact. We're pushing the upper limits of the negative divergence here on the PPO, but it's still there. So just to keep it simple, I still expect a reversal here soon, even if we get a mild pop. But you don't want to give it too much room. You have to use wider stops when trading natural gas because that's the nature of this beast. You try to run a 2-3% stop on and catch a trend trade or even just a multi-week swing trade, you're going to get stopped out in the daily grind. So it's nothing's changed. We're still at resistance on the long-term chart, and that's the nature of natural gas. It tends to have these pretty impulsive and almost unidirectional rips up into overbought conditions. Overbought, rip, correction. Overbought right here into resistance, correction. Overbought there, we had divergence, and then we finally corrected. Overbought, correction. You get the point. Back here, overbought and correction. No change in lumber today. Lumber's sort of consolidating, flat today, down 0.69, which is essentially flat. There's that uptrend line, and we're still coming off that divergent low. So this one still looks good on the daily chart, and even the 60-minute chart for now. And then let me see one more. Oh, gold. I wanted to update gold. Haven't done that in a couple of days. Here's GC gold futures. Let me put this chart back in there. We do have some potential divergence right here forming. You can see the pretty steep divergence on the RSI and PPO as they make higher highs as prices make equal highs right there. And again, it's all about the dollar and the euro, at least a big part of it, where they had, and we're still above that key 1777 support. So whether we have another jog down, and if we do, doesn't change anything technically, as long as it's a minor jog down to around that level there, and then a reversal, because it would keep this divergence intact. There's no way this divergence gets taken out unless we have a big move down and a break below solid break down below 1777 could certainly do that. So that's why you don't fall in love with it, and you keep your stops in place somewhat below there. But again, unless we take out this level, this was the big level here, that yellow line, resistance about 1837, 1838. That was the last tag of it there. That's what we need to do, is take that out. Unless that happens, we're in this multi-month trading range, which has only been, we've had a brief period where we dipped down below it and shot right back into it there. So that's gold for you. And here's the euro, which hit that resistance, double resistance recently at 119.37 right there. Previous reaction high, as well as some other reactions on there right there. So that's when gold reversed, was when the euro hit resistance. So we need to see these lines taken out, the downtrend line, and especially that 1937 level. I still expect it to happen based on everything, not just this chart, but my longer term analysis of the dollar and the euro. And that's what we need to see for gold to run. And when that happens, I suspect gold will have either broken out or will break out above the trading range shortly after the euro breaks above 119, 137. And of course, I need to see the dollar take another leg down. Dollar put in a divergent high, just like the euro put in a divergent low. Remember, gold moves along with the euro, positively correlated and inversely correlated or opposite to the dollar. So there was our breakdown right there. Most recent big level right here is 91,793. So the same story. I need to see, or would like to see, the dollar break 91.79. With the euro breaking out above the level I just showed you, and then gold breaking above the trading range, and that will be a pretty powerful buy signal, I believe, for gold if and when that happens. All right, I'm going to wrap it up here. Again, those are some of the things I'm watching now, and keep the video short, get it out to you guys before the close, and if I see anything else, I'll get another post out to you today. This has been Randy Finney with Right Side of the Chart. Have a great day.